Good morning, trading world. It is January 30th, 2023, and this is my pre-market outlook for trading the markets. The title for today's outlook, $1 Million Moments, Preparation and Risk. Now, as a trader, you've probably seen this chart with emotional cycles of the market, from optimism to hopelessness. But there's a part I want to point out between euphoria and anxiety. This is where successful traders not only recognize the point of maximum financial risk, but position themselves as such. If you're laid back, maybe older, looking to be less risky, and maybe already successful, the mindset may be more of protect profits and hedge for downside potential, with little emphasis on taking advantage on a reversal. If you're younger, more risk averse, your emphasis is more on positioning to take advantage of the downturn. Either way, both will have a great handle on risk, knowing what losses could be or gains could be with a stair step of moves in your portfolio at 3, 7, 13, and 20%. Now you may ask, why 7, 13, and 20%? Well, in moments of true volatility, the market has implemented circuit breakers that prevent continued momentum losses at these levels. Meaning pretty much the market will shed itself off at 7, 13, and 20% losses within a day. And you also need to know that if we're within 30 minutes of closing at the end of the day, those circuit breakers won't come on. They won't happen. So in moments of true volatility, the market has implemented these to kind of protect itself. Now, if there is a true drop, these are likely levels at which you may be able to get enough traction to get out of positions in illiquid markets. It's when there's pretty much no liquidity to, jump in and out of positions. And believe me, you're going to see that at some point. It does happen. It is rare, but it does happen. And now that I've talked a little bit about, from the emotional side, let's look at what happens on the technical side. The reason so much money changes hands during this period is we are in a huge shift or change of trend between large time frames, weekly and monthly. So many people are still pigeonholed into thinking you can only make money going up, so most investors are not active, so they leave money sitting to endure these losses. Now, there are active investors who hedge for these moments. Then there are a lot of investors that try to position themselves for the change, basically picking sides. No matter what side you're on, the majority of investors get it wrong. Now, the majority of investors who get it wrong are not wrong on direction. They're wrong on time and risk. Most investors graduate to some form of premium selling, meaning selling options to collect theta. Not many people understand that risk is forever expanding and contracting with volatility. You see it clearly in the futures market when they increase the margin per contract when volatility increases. But with options, it's less visible. Even though your option positions may not change, the margin it takes to hold on to these positions does. This is why so many people are shocked when they get margin calls. So it's ideal to plan to leave 2/3 of your account free for the change of margin in moments of extreme volatility. This is the time to position yourself for huge gains, but understand and be okay with what and how much you are risking. Prepare for margin expansion and contraction, and be sure to give yourself the gift of time. If you're thinking a move will take 4 weeks, add 1/3 or half of that amount to it on the back end if you can afford it. That's pretty much what I want to say about preparing for these $1 million moments. As I say all the time at the end of these outlooks, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the amount of risk that you have on in each of these positions. And you manage that risk in accordance to your account size. So in essence, understanding that there's a big shift about to happen, and I understand you may want to take sides. But in taking sides, have a clear amount of what it's okay to lose, and that is your risk tolerance. At the same time, if you're involved in any type of premium selling strategy, make sure to leave at least 2/3 of your account free for the change in margin requirements. And then again, especially during these times, give yourself the gift of time in your option positions. Now, the weekly outlook is bullish, closing above the 405.68 with a projected retracement of around the 400 area. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. Even with the pullback coming in a big way, I don't think we are finished with the bullish side of this shift yet. I think there will be another big move up with some follow through, meaning we could shoot up, but we may not come right back down. It may take a little time for it to play out. Remember, I pointed out that the FOMC announcements takes place on the 1st of the month. What happens on the 1st of the month is new fund flows. And the FOMC announcement taking place on the 1st of the month is like throwing a Molotov cocktail into a room full of dynamite. There will be a big explosive move. So be prepared for that. Have your risk in check. Remember, I don't think we're done with the upside move, and that FOMC announcement just could be that explosive trigger that takes us even further up. And something that I've been looking for, it hasn't quite happened yet, but I'm still looking for that rally in which, I've seen it happen in small doses, but not on the size and scale that I'm used to. But we're going to get a rally that's so powerful that volatility is going to increase on the up move. This doesn't happen often, but that is the key signal for me, letting me know that we're at the end and it's about to reverse. So keep that in mind. Let's get to the key levels of the day. All right, here we are with the key levels to watch for today. Starting on the resistance side, we have our jack resistance at the 403 to 404 area. And this is truly going to be a key area to pay attention to today, as I expect some big rejection at least once off of this area. Then we have our queen resistance area, which is 405 to the 406 area. Then we have the king resistance area, 407 to the 408 area. I wouldn't be surprised if we do get up here and get back just around this 410 area. Maybe not today, but definitely at some point this week. Maybe the explosion off of the FOMC induced first of the month takes us well beyond this. On the support side, we have our jack support at 401 to the 400 area. Queen support 399 to the 398 area. This is also a big area of concern, and actually for today, this is actually my target area for lows today, around the 399 to 398. Maybe some overshoot at some point, taking us just beyond that. And then we have our king support 397 to the 393 area. The main thesis for the day is bearish, closing below the 405.68 with a projected target low of between 405 and 395. Alternate thesis is bullish, closing above the 405.68 with a projected target high of between 405 and 408. The main channel we're in is 397 up to 416. The main channel below is 397 down to 379. Last week, market strength and breadth opened gap down and was strongly bullish right out the gate. Then fell just as strong mid-morning and back up, creating a broad range on the day. I expect a similar broad range today with a price target of around that 399 area with some possible overshoot. We have harmony between the technical side, which is bearish, and the quant side, which is also bearish. I'd like to point out, I spoke about the market being irrational when there are gaps in order flow. And 2 days back to back, I had harmony between the technical side and the quant side. And for 2 days straight, it didn't play out. This is a perfect definition of irrational activity or price action by the market. And we often get these during trend shifts between time frames. So just wanted to point that out. From here, let's bring up the scenarios of the day. And here we are with the first scenario of the day. The first two scenarios are pretty much tied as far as probability, but starting with our trend day down day type, meaning we open gap down and start with a pushback toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area, and not always, but a good amount of times, we usually start the second half of the day with what looks like continuation of the primary trend of the morning, but often turns into a head fake at some point, giving us sometimes a minor, or today, which may be a major or big rally into the close, or somewhere near before the close at some point. So that is our trend day down day type structure. Our second scenario is going to be our expanded range day structure. We could have an initial push up toward resistance before going back down to revisit lows of the morning and consolidating for a while with swings both up and down. That is our expanded range day type structure. All right, our last scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward jack or queen support area and find our midday chop around either the queen or king support before going back up with the same energy or force we came down with the first part of the day. Also, with the rounded reversal day type structure, I do want to make you aware of the vice versa alert that we have for today. And that vice versa alert could look the following way. We could get a continued push up at the open, find our midday chop around either the jack or queen resistance area before coming down the second part of the day with the same amount of force we went up with the first part of the day. That is our rounded reversal day type structure. Again, I prefaced or titled this morning's outlook $1 Million Moments. And the reason for this is you can never have $1 million moment or any kind of wildly successful moment in trading, or it rarely happens, without preparation. And involved in that preparation is understanding your risk so that you know what and how much you can risk, and preparing for those things that are involved in risk, like margin expansion and contraction, so that you don't get caught up where 90% of other traders get caught up in and not preparing for these things and getting those margin calls, even though you had the direction or position picked right, but you get pushed out of those positions because of margin calls and unforced errors. So, as always, again, your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.